Ever felt like you were on top of the world with your investments, only to have the rug pulled out from under you? Well, that's exactly what happened to me back in 2008. I thought I had it all figured out. But when the market crash wiped out a significant portion of my portfolio, it was a harsh lesson in the importance of diversification and risk management. So today I'll take you to the worst investment mistakes I've made and how to avoid them. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Investing is a crucial component of building wealth and achieving financial freedom. But it's also an endeavor fraught with potential pitfalls, from overconfidence to lack of diversification. A single misstep can derail your investment strategy and jeopardize your hard-earned savings. The consequences of investment mistakes can be severe, ranging from missed opportunities to substantial losses. A poorly timed decision or a failure to manage risk effectively can wipe out years of diligent saving and investing. Moreover, the emotional toll of such setbacks can be significant, leaving investors discouraged and reluctant to continue their wealth-building journey. It's essential to recognize that investment mistakes are not merely cautionary tales, but opportunities for growth and learning. By acknowledging our missteps, we can develop a deeper understanding of the market's complexities and to cultivate a more disciplined, risk-aware approach to investing. Ultimately, this knowledge can empower us to make more informed decisions and navigate the financial landscape with greater confidence and resilience. So buckle up because we're about to embark on a roller coaster ride through some of my most cringe-worthy investment blunders. Believe me, these tales are not for the faint of heart, but they're guaranteed to leave you with a newfound appreciation for the art of avoiding financial catastrophes. Let's start with my foray into the world of hot stock tips. You know those guys at the gym or the bar who claim to have inside information on the next big thing? Well, I was gullible enough to listen to one of them, and boy did I pay the price. I was like taking investment advice from a fortune cookie, utterly meaningless and potentially hazardous. Here's how it played out. I was convinced that a certain tech company was on the verge of a groundbreaking discovery, and I poured a substantial chunk of my savings into their stock. Turns out, the only thing they were breaking ground on was a new parking lot. Needless to say, my money vanished faster than a plate of donuts at a police station. But wait, there's more. Remember the cryptocurrency craze back a few years? I'll admit, I got caught up in the hype like a kid chasing the ice cream truck. I thought I was outsmarting the system by investing in obscure digital currencies with names that sounded like they were dreamed up by a toddler. Spoiler alert, I wasn't outsmarting anyone except myself. It was like playing financial Russian roulette, but with all of the chambers loaded. One by one, these so-called cryptocurrencies went up in virtual smoke, leaving me with a portfolio that was about as valuable as a pet rock. At least, pet rocks don't change transaction fees. Now let's talk about my ill-fated attempt at timing the market. I fancied myself as a financial wizard, capable of predicting market trends with the accuracy of a crystal ball. But boy was I wrong. It was like trying to catch a greased pig while blindfolded, a futile and messy endeavor. I would meticulously analyze charts, study economic indicators, and consult my trusty Magic 8 Ball, only to buy or sell at the absolute worst possible moment. It was as if the markets were playing a cruel joke on me, mocking my feeble attempts at outsmarting them. But don't worry, I've saved the piece de resistance for last. Brace yourself for the tale of my disastrous foray into the world of penny stocks. Now I know what you're thinking. Penny stocks? Seriously? And believe me, I've asked myself the same question countless times. It all started with a tip from a guy I met at a shady investment seminar. He promised me riches beyond my wildest dreams if I invested in this surefire penny stock. Well, let's just say that the only thing that was surefire was my ability to lose money at an alarming rate. It was like throwing my hard-earned cash into a black hole, never to be seen again. The company's groundbreaking product turned out to be nothing more than a glorified paperweight, and their innovative business model was about as sustainable as a sandcastle in a tsunami. But here's the kicker. Even after all of these colossal blunders, I didn't give up. That's right. I'm a glutton for punishment, but I'm also a firm believer in learning from my mistakes. And let me tell you, those lessons have been seared into my brain like a brand on a cattle's hide. Through trial and error, emphasis on error, I've learned the importance of diversification, risk management, and doing your due diligence. I've embraced the wisdom of investing in solid, well-established companies with a track record of success, rather than chasing the latest get-rich-quick scheme. Most importantly, I've cultivated a healthy dose of skepticism and a willingness to question conventional wisdom. Just because everyone else is jumping in on the bandwagon doesn't mean I have to follow suit blindly. In fact, one of the biggest lessons I've learned is the value of patience and long-term thinking. Investing isn't a sprint, it's a marathon, and those who try to take shortcuts often end up losing the race altogether. It's far better to adopt a disciplined, measured approach, staying the course even when the markets are volatile and the naysayers are shouting doom and gloom. Speaking of doom and gloom, let's not forget about the emotional roller coaster that comes with making investment mistakes. It's easy to get caught up in the euphoria of a big win, only to come crashing down when things go south. I've been there, riding the highs and lows like a seasoned surfer navigating treacherous waves. But here's the thing. Emotional decision-making is one of the surest paths to financial ruin. When you let fear, greed, or panic dictate your investment strategy, you're setting yourself up for failure. That's why it's so important to develop a thick skin and an unwavering commitment to your long-term goals. Believe me, I know how tempting it can be to bail out at the first sign of trouble or to chase after the next hot tip. But resist that urge. Stay focused, stay disciplined, and trust in the power of compounding returns over time. So there you have it, a cautionary tale of epic proportions, filled with more twists and turns than a soap opera marathon. But fear not, dear viewer, for every mistake I've made has been a stepping stone on the path to becoming a wiser, more disciplined investor. Through my rollercoaster journey of investment mistakes, I've learned some invaluable lessons that has shaped me into a more prudent and successful investor. And let me instill these insights for you. First and foremost, research is your best friend. Don't blindly follow tips or hype. Do your due diligence and thoroughly understand the companies, industries, and market conditions you're investing in. Knowledge is power, and it can mean the difference between a lucrative investment and a costly blunder. Then, diversification is key. Don't put all of your eggs in one basket, no matter how promising it may seem. Spread your investments across different asset classes, sectors, and geographical regions to mitigate risk and weather market fluctuations. And finally, risk management should be at the forefront of your investment strategy. Understand your risk tolerance, set appropriate step losses, and be prepared to cut your losses when necessary. Throwing good money after bad mistakes is a surefire way to compound your mistakes. After all, investing is a journey filled with potential pitfalls. But by learning from our mistakes, we can become wiser and more resilient investors. So embrace research, diversification, and risk management as your guiding principles. And never stop striving to improve your financial decision-making. Now, it's your turn, my fellow investors. Share your own investment experiences, triumphs, and blunders in the comments below. What lessons have you learned along the way? And don't forget to subscribe for more valuable insights and tips that could save you from making costly mistakes in the future. Well, that's basically the worst investment mistakes I've made and how to avoid them. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.